Traders are becoming a little bit more confident. It seems more likely now that Kevin Warsh will get that nomination since the BOJ has retracted on pursuing the Federal Reserve over the cost overruns. There's more likely of a chance that Warsh can get through, and traders are now betting that that means a more dovish outlook in the second half of the year. As far as this week's meeting is concerned, the friction will be between what the Fed has to say between the job situation and the inflation outlook. So obviously, this is something that other central banks also have to deal with. In the very short term, this rise in energy prices has pushed up inflation, notably with gasoline prices in the United States. And yet, if you look further ahead, you've still got this jobs destruction wave coming because of AI adoption. Particularly, the United States is one of the most aggressive countries in doing so. And you see a number of companies laying off people because they're able to replace the jobs with AI products. And so the Fed will be caught somewhere in between the two. Investors for now are betting that it's the jobs situation which will become more important as the year goes on. The Fed will be able to use that as a reason for saying that longer term inflation will come down because the deflationary impact of AI, and that will create more weakness in the jobs market. And that will be a reason later on to lower interest rates.
Okay, so that's the Fed, but we've got a whole bunch of other central banks reporting or making decisions this week, not necessarily reporting. Could we expect any hawkish surprises out of others?
Probably the highest chances will be the Bank of Japan and the European Central Bank. So Bank of Japan comes through tomorrow. For now, they did a big flip-flop. Traders were fully expecting there would be an interest rate hike in April. They've backtracked a long way on that, probably under pressure from the politicians who are concerned about short-term risks to the economy. For the moment, traders are not very convinced that the next meeting in June will produce that hike. So the BOJ's got quite a bit of work to do if it wants to persuade investors that it is as hawkish as they seemed to be just a few weeks ago. So there's an opportunity for that will be during the press conference. Governor Ueda may well be able to push ahead and get people excited about a rate hike in June. For the moment, the market thinks it will only be July, so maybe he can bring it forward. Then you've got the European Central Bank. Very mixed views on what they need to do there. But again, there's a possibility of a surprise that they may say that it's more important to get ahead of the energy risk, because clearly Europe is going to be exposed for a long time on higher energy prices. They don't appear to be coming down. Even if we get some kind of a resolution that makes flowing more easy through the Strait of Hormuz, the damage done to the energy supply over the medium term is pretty high. Europe is right at the apex of that.
Yeah.
So the ECB may well want to sound a bit more hawkish to get ahead of that reasoning. So ECB and BOJ most likely for a surprise.